Welcome back to the stock portfolio update videos. Currently, my two stock portfolios sit at a combined value of over $104,000. That's made up of the $55,814 in my stake portfolio and then the $48,391 in my Vanguard portfolio. Overall, it's not been a recent bad week for many stock investors. While stocks have been very volatile, today alone my portfolio is up 2.48% or $1,350, and that's just my stake portfolio. My Vanguard portfolio is in the green as well, taking my total stock portfolio gains to around $2,000. So not a bad day for many investors, and if we have a look through my portfolio, you can see VOO today alone is up over 2%, showing the overall broader market is big into the green as stocks rebound. Overall, looking through my holdings, I am going to be speaking today about this pending order I have around me selling some of my stocks actually, but I won't be selling it to take money out. I'll be selling it to reallocate some funds around my portfolio. In regards with my stake portfolio, things are pretty steady at the moment. I did put $1,000 in not too long ago, but I will be putting more money in beginning of next week, so I can hopefully grow my positions. If any of you have been keeping track of Amazon or Google stock, these are two stocks that I've really been trying to grow my position in, but I haven't been able to capitalize on the recent downturn. And that is quite sad because I'd allocated a lot of money prior to the really big dip. As you can see, I'm still in the red around 5%, but if I could have been buying shares at this 166, these kind of prices here, that would have been ideal. And that was only at the start of this week. But you can see Amazon stock is up over 10% in just the last week alone. It's still down over 9% in the month. So I was doing a lot of buying around 213, and then a bit more around 203, and I think some in the 190s, but I haven't been able to capitalize completely and be buying during these really down times, especially if you could get it for under $170 a share. I think that was a very reasonable price for Amazon stock. Obviously, there's lots of worries about the tariffs, but one of the stocks I did want to speak about today was Google. So Google is having a great day, up 2.53%, after Google just did their earnings as well. So you can feel free to have a look into the earnings, but they did quite well, beating out with lots of worries around Google. About search, what the effects AI will have on the business, and even globally, things like tariffs. Obviously, that doesn't affect Google's business model as much, but you never really know. Maybe if it affects other business, that can cut back on the ad spend. So there are second kind of effects to these tariffs and the pain other businesses might be feeling. If we have a look at the last week, Alphabet, like Amazon, is up big. It's up 7.23% in just the last week alone. So great time for investors, and it's up nearly 5% after hours. So it's been a great holding. If you did manage to buy the dip here, the stock was trading at under $150 a share. So I'm quite disappointed I missed out on that. And as you can see, as I've been growing my position, I'm still down 3%. But again, that's because I was buying more and more shares at a bit more of an elevated price. I wasn't buying up here, but even down when it got to like the 180s and things like that, even in the 170s, I tried to buy some, and you can see my average share price is around $164. So still a lot off the highs it was of around $205 a share, but still a little bit higher than what I could have been growing my position at. But it's very hard to time the market, which just shows again and again and again. In regards with my Vanguard portfolio, nothing's changed. I still have these two holdings. I did, from my last video, I potentially might have bought more VGS shares. I think I bought 4 more shares because I received a $500 dividend. So I had extra cash sitting in my Vanguard account, and I decided to allocate those funds into VGS. So in my mind, this is probably just a great place for me to have my money at the moment. I think it kind of gives me a global diversification. And I don't get charged as much fees as I do on stake as what I do on Vanguard. Vanguard's a bit cheaper, which is good with that. So as you can see, the portfolio value is getting closer and closer to 50,000, which is a goal of mine. I probably would have hit it if we didn't have this market downturn, but I'm trying to use this market downturn to buy more shares. So I will hit it. Hopefully next month, I'll be able to break the $50,000 mark across both my portfolios. And even my stock portfolio now is sitting at around $104,200, I believe. So I'm getting really close to the $105,000 mark. So if I can hit, let's say by the end of July, close to 108,000, I'd be quite happy with that if stocks keep rallying and kind of building back those gains that were lost. Overall, if we have a look at my Excel spreadsheet, you can see how things are kind of weighted at the moment. Because I haven't bought anything new in my stake portfolio, things are pretty similar, with VOO being my biggest position by far at 46%. And then if you look at my other portfolio, you can see it's weighted 75 to 25, so pretty even. But after this sale, when I do decide to do that, things will probably drop to around, let's say 80 to 20. And I'm not mad about that. Obviously my dividend will be reduced going forward, so maybe I don't hit my $2,000 dividend goal this year. But I think capital gains wise, I think I have a much better chance in VGS getting that global exposure than I do with VLC. And I do have exposure to Australian shares in my retirement accounts, which I don't show on here. And so I do still have some exposure to that. So I'm not losing out completely, but I think I can get better gains elsewhere. And if we have a look at my spreadsheets and you kind of look at the values of the portfolios, things have fluctuated a lot. Overall, my stake portfolio is still pretty steady, kind of around the same value. I think when we end the month, I'll be pretty similar to where we were at the start of April to the end. But we just had a lot of volatility in the middle of it. In regards to my Vanguard account, that will be up, so that's good. But yeah, a big goal of mine that I've been harping on about is getting both my portfolios to over $50,000. And then the next goal will be $75,000. And then if I can hit that $100,000 mark across both, that would be really, really big for my kind of growth. And I think I can hopefully do that in the next 2-3 years. It took me, let's say 4 years to hit where I'm at now, 4 or 5 years nearly. And I think the next set of the next 100,000 should be easy, as what a lot of people say, with bigger dividends, better compounding. But we'll just see. Again, you never know what the markets are going to do really long term. Hopefully you're just in the green and things kind of continue with the same historical trends that I've been doing over the past decades of kind of things going up and to the right. Obviously you're going to get crashes, but if I can just dollar cost average in and make the most of these opportunities to buy more shares into quality companies I believe in, hopefully that results in a good outcome. In regards to the dividends, that which we briefly spoke on, I did invest my $500 dividend. So at the end of the month, I'll update these so you can see it. And yeah, these are kind of my dividends over the years, how it's grown a lot. And every single dividend I get is reinvested back into my portfolio. One last look as again through the portfolio. If we look at some of the companies I'm watching as well, just because I'm watching them doesn't mean I want to necessarily buy them, but these are just ones I keep an eye out on. I do a lot of shorts on these. So if we have a look through some of these names, you obviously know Netflix. Netflix is up 45% in the last 6 months. Really had a really strong time. Joseph Carlson, a YouTuber I watch on here, does stock portfolio updates. He's a big advocate for Netflix stock and he's done very well with his investment. The stock's up 11% in the last month. In the last week, it's up 8%. So even in the last year, it's up 94%. It has been a great year for Netflix investors. So this is a stock I looked at. Didn't know if it was something necessarily I wanted to put my money into. I'm a Netflix, I have a subscription. I like the product, but I never bought the stock. And that's probably somewhere where I missed out on some money. If we keep going through down the watch list, there's other stocks as well, like Nvidia, who, whilst they've had a good year, if you just look at the last year, 28%, there's so much volatility. Just look at this graph. If we look in the last week alone, the stock has rebounded up 7%, but in the last month, it's still down over 11%, or basically 11%. So a lot of Nvidia's stockholders are hurt. It's down 24% in the last 6 months. Whether you think this is a good buying opportunity or not, potentially, feel free to share in the comments your thoughts on Nvidia. Next, if we keep going through, there will be Tesla. So Tesla just reported its earnings. They lost out on everything. They missed on every single thing, pretty much. But the stock went up. So it was clearly maybe they had already baked that into the price, the fact that they were going to miss out on earnings, especially with how poor the sales in Europe had done. But the stock's up 12% this week. And again, Tesla's kind of a stock where it's more on the guidance. People are looking more on the long term with Tesla. They want to know what's happening, kind of not just right now, obviously that's important, but 5-10 years in the future. So the stock's rebounded quite well this week, but again, when you look at the last 6 months, it's still down like many stocks, but it's had a very good year, up 52%. And if you manage to sell up here in these highs in December last year, you'd be extremely happy. Some other stocks that are actually in my portfolio that I'll mention is Apple. So Apple's one where people were quite worried with the tariffs, how that would affect Apple's business. And you can see it's rebounded quite strong in this last week, but it is still down in the month. China obviously is a big factor for Apple with manufacturing and even sales in China. So they're one of the companies I'll be quite happy if this tariff nonsense gets de-escalated or sorted out. It'll be quite good for them, and I think it'll be good for Apple equity investors as well. So I think it'll be good for myself if Apple gets. I sold a lot of my Apple shares. I used to own around $4,500 I had in Apple, and I sold out a lot of it, and I've allocated some of those funds into Amazon and Google because I think I can get better growth. Costco is one of the stocks that have actually been quite different. So again, majority of my stock portfolio is into big tech, but Costco is a little bit different. In the last 6 months, it's actually up while many other stocks are down, and in the last year, it's up 35%. So very good return. I sold half of my Costco position. I'm still up 70%. I took some gains. Costco trades at a very high PE ratio, but it's a great company. I'm a Costco member as well. Just renewed that, and I think it's a good company going forward. Microsoft is one that's had a very tough year, down whilst the S&P was up. Even in the last 5 years, it had this great run in 23 and 24, well, mainly 23, but since then it's been a bit of a slow burner. It's down in the last 6 months. Even in this last week, as other stocks jumped 7%, Microsoft is still up, but around 6%. I earned $5,200 in equity or in Microsoft, with an average share price of around $314. So I'm still big into the green, around 24%, 23%, but nowhere near as much as I used to be. Like I said, VOO is one of my biggest positions. It's now a bit smaller than some of my other Vanguard positions, but it sways a lot of my portfolio, and it gives me my biggest dividend in this, in my stake portfolio. It's sitting around 19% in the gains at the moment, so just under 20%, but that's because I dollar cost average into VOO, as I believe I want to keep it around 50% of my stock portfolio value, as I don't think I'm some amazing investor. I think it's good to have general market exposure, because long term it is quite difficult to beat the market. So that's why I do have a lot of exposure to ETFs, but then I also give myself a bit of money to invest and pick stocks and hopefully generate some alpha. Going on to this pending order, so you can see it is selling $2,000 worth of VLC. So that's my Vanguard's large companies ETF in Australia. So that holds a lot of the banks and mining giants. I think long term, I think they had a very good year last year, but I think it'll be hard to replicate that this year. I have sold out a little bit already, and I allocated that to VGS. If I sell out around 2,000, it will leave it around $10,000 sitting in there, which is still a reasonable amount of money. That's bigger exposure than I have in many of my individual stocks, and I believe in them more than I do believe in the VLC ETF. So I'm slowly selling out of it a little bit. I understand now is not the best time to sell. That's why I waited, and the stock has rebounded a little bit this last week or so. So the price is up. So I'll see what goes on. Maybe at $80 a share I'll sell. Obviously going to adjust this sell order, but yeah, that's kind of my plan at the moment, is to sell some of that and then just allocate those funds into VGS. I'm getting closer to build. After I do that sale, I'll be getting closer and closer to $40,000 in VGS, and yeah, that'll be a good position for me, hopefully long term. This was just a quick stock portfolio update video. Hopefully the next one I do, the stock portfolio value will have gone above $105,000, which will be a nice little goal, a little thing to tick off as I'm kind of making my way through 2025. I know it's been a tough year for many investors, me too, but I'm just kind of using this time to dollar cost average into companies I believe in long term. Feel free to share, how you're doing and what you're doing with your investments in the comments. And that's all for now.